Entrepreneurial Finance. Get ready to dive into some very interesting concepts and practical tips as well. We have two very prominent guests with us here today. Job Andreoli, thank you for being with us again. He's the head of the business incubator at Nyenrode University, Business University, Amsterdam. And we also have Brigitte Bauman, an early stage investor and the founder of Go Beyond Early Investing and FNO. Brigitte, thank you so much for being with us today.
Delighted to be here.
We are delighted to have you both. I'm going to leave the stage to you so that you can start the panel. I will see you later.
Thank you so much, Valentina. Super excited to be invited for this, to be sharing something on entrepreneurial finance, which is really my sweet spot, and so is it of Brigitte. So I'm super happy to have you here as well, Brigitte. Let me start by sharing something about myself. I'm a senior lecturer of finance at the Nyenrode Business University. I'm also doing my PhD in entrepreneurial finance. I lead the Nyenrode incubator. I'm part of the advisory board of a VC fund, and as such, actually, I come from corporates. I've been working with startups. Actually, I've been trying to get funding for my own startup. I have obtained funding for my own startup. I've helped a number of startups, and as such, I came into this field. And now I'm more looking into the academic side of it, and particularly the funding of ventures. That's why I also wrote a book. I wrote a book which actually happens to have the same title as this session, Entrepreneurial Finance: The Art and Science of Growing Ventures, together with Luisa Alemani, currently at the London Business School. Which kind of delves into the challenges and the opportunities that funding provides for entrepreneurs and investors. So what we've seen is that the scene has dramatically grown, has dramatically evolved, and we're trying to capture it. We're trying to keep with developments, and that's what this textbook is about. From a even more hands-on perspective, I have Brigitte Bauman, whom I met 4 years ago at Harvard Business University for a session. We joined together a number of sessions. Brigitte, I'm so happy to have you. Maybe you would share something about yourself.
Sure. I've started as an engineer, and I went on to being an entrepreneur for many years, including one company became Expedia.com. I was leading the teams at American Express for travel, and there was another team at Microsoft doing the software development, and then it was spun out. And for a number of years, I've now been an investor since 2003, an angel investor, passionate about that, passionate about creating Go Beyond Investing. We've created one of the largest angel investor community across Europe, with a lot of women and young adults compared to statistics that tend to be very male-oriented. And at the same time, I'm a fintech entrepreneur, and I've done a number of types of financing, from starting myself, putting a lot of my savings in the company, to raising money that very similar to venture capital. So delighted to be here and share experiences.
Great, Brigitte. Thank you. Thank you so much for your introduction. So what we've seen, and the thing is that, as I just shortly mentioned in my introduction, what we've seen is that the scene, or the scene of funding entrepreneurial ventures has evolved dramatically, meaning that over the past 10, 15 years, a large number of new funding sources arose and actually provide a number of opportunities for both entrepreneurs as well as for investors. What Brigitte and myself have discussed that, of course, and we've come up with a number of central themes which provide an opportunity for both entrepreneurs and investors to kind of consider when really applying, when really using the funding sources for their ventures. Those five themes that we would like to discuss is the venture development phase connected with funding options, B, the considerations that investors take, the key considerations for entrepreneurs, the country and cultural specific challenges, as in it's nice to have these kind of overarching insights, but country and cultural do determine the actual application. And finally, we'll conclude with a number of lessons from practice, and we actively invite all of you to send in your questions. Please do on the chat. We have scheduled for at least 10 minutes for the Q&A at the end of this session. So I would really love to kind of hear your comments and be even more specific where we need to. So let's start with like probably more kind of theoretical concepts which we can apply to practice. So I'm largely talking from academia, and that's what we see like the stage of venture development. We see like 4 main stages of venture development, and these stages of venture development kind of are one of the characteristics of ventures. So besides their industry, besides their business model, besides their team, whatever. Venture development stage is very important. Important in terms of what are the options for you to consider, what are the funding options for you to consider to get your venture off the ground or get your venture growing or accelerating in growth. What we've seen is that these venture development phases strongly coincide with funding options. So if we try to kind of, this is part of my book, we've tried to kind of put it in a visual where you see that the seed stage has more kind of the entrepreneur funding it and family and friends and incubators, accelerators or crowdfunding and business angels, while when we kind of grow the venture, the venture becomes more developed, we see that other sources of funding kind of take over. As in the entrepreneur does less, the family and friends typically does less, but we see more kind of venture capital coming on, formal venture capital coming in, and other forms of funding. This is kind of how we typically would associate venture development phases, so the growth of a venture, together with the funding options they have.
And maybe I can add a couple of things. First of all, if you want to stay on that slide, the first thing as an entrepreneur is indeed understanding really where we are and making sure that we're well solid in that position, and we have elements of traction that shows we're on the right path to go to the next stage of development before we start thinking about financing. And that also means that when we're thinking about financing is to realize that some of the forms of financing that we just described, we will actually be giving a portion of our company. Other types of financing, there will be grants, and meaning money that we can keep. We'll have to do some reporting, but we can very much, we don't have to give the money back, or some forms are ones where we will have to give the money back. So understanding where we are, what that means for the types of financing, and how to sequence these different types of financing, and how to prepare the right seeds for the evolution of the type of financing is tricky, but also very exciting.
Thank you, Brigitte. This is a great add-on. I think, like, if we look at the venture funding sources here, we see that the larger part consists of funding sources which are equity-based, so which are indeed giving away or providing part of your company for the investor, while at the same time, we see, like, for instance, governmental programs or governmental subsidies or grants is something that keeps on being relevant throughout the stages, and is actually a funding source for which you do not need to kind of give away any part of your venture. Thank you for adding that, Brigitte. So, if we look at academia, if we look at how does universities, how do we look at funding provided to ventures? There are 4 key considerations that we typically look at. In academia, it's called the jockey, the horse, the market, and the proof. The jockey refers to the entrepreneur. What we see is the entrepreneur, the person, the team leading the venture is of key interest for any investor. After that, we look at the horse. The horse is more the business model. The horse is more about what is the company about, what industry is it in. Next, we also look at the market size, the growth, the potential. And the 4th aspect would be the proof. So to what extent has the venture been able to prove what it kind of envisions and gather market proof for its business model and products.
Yeah, and maybe to build on that, as an investor, whenever I look at an investment, I look at those dimensions, but I also continuously look at the context of the overall portfolio that I'm being. Because angel investing, I'm an angel investor, so I come in kind of the seed startup stage, as we saw before. I know that it's very, very risky. There's a high percentage of the companies that will not necessarily do very well, and that I won't be able to get money back, or I will lose everything or part of what I've invested in. And so I need to invest in at least 10 to 20 startups. So when I look at a startup, I also look at the consideration of how well does it fit where my portfolio is right now. And this is also for when I decide to reinvest. For any of you, if you're thinking of becoming angel investors, it's really, really important to build a portfolio, but also to keep a good 50% of whatever money you have for this allocation, not more than 2 to 10% of your net wealth, for reinvesting in the entrepreneurs that do well. Because on average, most entrepreneurs need at least 3 to 5 financing rounds before they can attract much bigger investors or are poised to being acquired or buy back the shares from the investors.
Yeah, nice. Do actually, Brigitte, maybe to build on that again, have you noticed something like over the past year, if we look at, for instance, Corona, if we look at the market development, if we look at how the context has evolved over the past 10 months, have you noticed anything in your portfolio in kind of how the investment is being used, and maybe the potential or the need for additional investments in your current portfolio?
Yeah, well, I'll start with the last. I have over 40 live investments right now, and almost all needed finance much faster than expected, either because some actually COVID actually has accelerated their business. For example, I have one delivery company that there's so many things that are now being delivered has really exploded, or they've been able to reinvent themselves so that meant to survive, or they just to be able to weather storms. Like in some of my healthcare, especially pharma deals, they've had to stop some clinical trials, but they still need to keep some team. So one is I've seen they all needed money much earlier. Secondly is I've seen that investors, we focus first on our existing portfolios, which has made it harder for brand new businesses to get funded unless they're able to really show that they're addressing a very core need right now, because there's more and more the feeling that it's not as if COVID is going to go away anytime soon. Plus, a lot of the themes of today is that it's bringing a whole new dimension on opportunities in a whole new world. So this is the time for innovation. And so those businesses are getting the first priority from investors.
Yeah. Okay, nice. Yeah. Super, thank you. And maybe just to add on this, it's like we see here 4 considerations for investors. Do you agree with me that actually the emphasis that these factors get is very much determined by the venture development phase, which we treated earlier? So while the jockey or the entrepreneur is typically more kind of emphasized, the entrepreneur or the entrepreneurial team is more emphasized in the beginning, in the early stage, in the very early stage investments, as Brigitte does. Like what we see is that the horse or the business model of the venture typically gets a bit more attention in later stages of venture development.
Even though for me, team, including when I was just watching before one of the sessions on leadership, fantastic. However big your company is, leadership, and especially in entrepreneurial stages, we're still creating the DNA, and especially now with so many virtual teams. So even when I am a fund manager, I'm still putting team number 1. But yes, of course, afterwards you have more data, and you are able to better see, indeed, is there going to be a scalable and protectable economic model going forward?
Good, thank you. So next to considerations for investors, we also have key considerations for entrepreneurs, which is all about again, this match between the company stage and the types of financing, which we shortly addressed just now. But we also looked at personal readiness. I think, Brigitte, you mentioned something on that, as in readiness, being ready for the next step. Is that correct interpretation, or is it more than that?
Yeah, for me, the first thing, anytime I do a fundraise, and I did one also this year for one of my companies, Go Beyond, and each time we go out there, we'll talk a little bit about going back out there and telling a story and taking a step and understanding what that's going to mean. For example, in tough times, that means that we might have to give up a lot more of the company, of our shares. We will be a much smaller shareholder. When we bring one of my last investors that I brought, which was more like a venture capital, and it changed quite a bit of the reporting, the decision making. At the same time, it gave us access to much bigger amount of money than we had in previous rounds. So it opened up whole new opportunities. And even when you get a grant from a government grant, that also changes, because sometimes there's very little flexibility on how you can use the money. Whereas you might have prepared your offering or the application a year before, and so much has changed in a year, but the money is now to do very specific things with very little flexibility. So I think getting ourselves as the founders ready to what, and envisioning what it will mean and how we're going to, are we ready or not to change, and being prepared for that, to leverage that kind of financing, is really, really important.
Yeah, yeah. And that links, and actually, so the point you mentioned just now is a point that links very closely to the next one as well, getting the timing right, as in getting the right kind of funding at the right point in time.
And I have found, and that's why we'll talk in a minute about how important it is to prepare and test before we really go out there. I have found that for the investors and the ecosystem, once you're out there looking and everybody knows you're looking, there's kind of this 12 to 16 weeks, so 3 to 4 months clock that starts ticking. And after that, if you haven't done at least 60, 70% of your fundraise, people are like, oh, why should I even bother? It probably is not a good deal. So that clock is very, very important.
As in, must be smelly somehow. As in, that's why, as in, why didn't anyone else invest?
Or it's too, and like the next, I think, challenge, or it's too expensive, or the terms are not investor friendly enough. Again, we're talking about equity. And that's why one of the challenges as entrepreneurs is many times the fundraise is not a straight line. It has stops and goes, where sometimes we have to go back and rethink, readjust, maybe reach more milestones than we had thought we needed to do. And also it's a time where we have these tough decisions. Do we go, do we change the terms? And sometimes, and I've had the personal experience, that we go and take the money, but we're really not sure this is the right investor with the same values as us. So there's also very tough decisions. And all through this fundraise, we need to keep the business going. There's no type of financing that likes to, 3 months after you've sent in your application, you start, when they say, oh, by the way, you told us that you would be closing the following 3 customers. How is that going? And you say, you know what, I had to put my business on hold. So we actually don't have those. Everybody expects you to go and continue to build your business while you're fundraise. And that's why, as a team, if we go maybe to the next slide, because I see we're running out of time, and we want to make sure we have questions. Maybe if you go to the next slide about the process, it's a lot about preparation. And for me, the more I do fundraisers for my own businesses, and I watch entrepreneurs as an investor do fundraise, it's a lot like sales. And you have to be super prepared, and you have to make sure that the business continues to work, and that everybody shares, and that you recognize it's going to be more work, and that you find the way that you're going to be able to continue running that business. And so here, while most of us hone in into the running, as you see, actually running the marketing, just like running a campaign. If you're going to do crowdfunding, means that you've already done quite a few steps before.
Yeah. So the point is that, as in, we'll need to kind of get the funding for our venture in parallel to running the operations, and doing the funding for your venture requires a very structured approach. It requires a very structured approach and kind of managing the relationship with your investor, managing your relationship with the people that you're exposing yourself to. So it actually puts the entrepreneur very much in a hot spot, very much in a visible moment, which they really need to kind of manage both, kind of get the venture going, or keep the venture going, and at the same time raise the funding and manage the relationship with investors, in the different kind of investors, different funding sources.
Yeah, and I think all of us as entrepreneurs, it's not unusual that we only have 1-2 months more of cash while we're doing this heroic kind of stage in the business, fundraise, running the business, and until the round is closed and you really have the money and everything signed, it's not over. So it's so much of the time, it's a really tight thing. So having a contingency plan is also very, very important in that stage. Or else that, I would say about 30% of the investments that I've made that have died, they died during the fundraise, because it kept being optimistic, let's go for it, but the money was going down. They didn't want to adjust some of the terms or things like this, and didn't have a contingency plan, and it just collapse. But anyway, let's look at when it does work well. Shall we go to the next?
Yeah. So we look at when it does look well, and that there's more than just kind of like your business and your funding considerations. Actually, the culture or the country very much determines what kind of funding sources you can approach and how you approach those. So let's not forget that types of funding are like more prominent in different areas of the world. Also, the amounts of funding that you're expected to ask, or you are allowed to ask, or investors accept, as well as legal structures, as in how do you work together with these investors, and what are the terms that you agree upon together for these investors to ultimately work towards an exit and conclude their investment. So. It's more than just kind of the plain vanilla form of a venture development phase, jockey horse, proof and market. There's more than that. Please also look into the cultural particularities of your own country.
Because a lot of times as entrepreneurs, it's really good if you can leverage your local investing ecosystem before you go abroad. Does not mean you shouldn't think big and go broad, but I do a lot of cross-border investments, but I always first check, okay, did they leverage what they could do locally before they go beyond? After that, absolutely having international, or for some of you, depending where you are, I work in a lot of countries like Lebanon, Pakistan, Georgia, where the diaspora is really helping the local, but that's fantastic. But they also first say, okay, well, who's investing locally? Because they know there's a very good people or some money also locally.
Yeah. Okay. So that bridges very well to kind of how do we now actually start? So how do we make it work? How do we make all these considerations of both investors and entrepreneurs, as well as the particularities of a venture development phase and an industry business model, jockey horse? How do we make it work? How does it all come together, Brigitte? Maybe from your practical experience, you can help this.
You
overview.
See the fun.
Yeah, love it. Please.
So visually, you see this is a bit like a funnel, because the statistics are that if you're raising kind of angel or venture capital money, is often for 100 deals that the investor will look at, they will make one investment. So it's very, very important that we ask ourselves, the right questions to develop the right financing strategy. This is a summary a little bit of what we've said. Why are we raising the money? What's the contingency? How much do we need now as an entrepreneur? How much will we need for the next couple of rounds? And the timing, which then leads to what type of financing, what kind of experience investors we want, what kind of mix, and what sequence we will be raising money. And this thing that we keep on saying, how can we get some help so we continue to run the business? And concretely, in that first phase, when we're going out there to test, I'm a big believer that preparing to then go test. And when we see that it looks like, hey, we've got a good offering, that the market, because the markets change all the time, as we've just talked, COVID is not the same financing now as it was, last January, February. So here's the 3 concrete things that I usually do. First of all, I make sure I really prepare things like the story. Everybody invests in the story. I also really look to see how much I want to raise and what's the minimum. So how many investors, again, if I'm doing equity investing, how many do I want? Will I accept small investors, but that might be very strategic and help me a lot, or much bigger ones who might be more institutional? What are high level? What are kind of investors do I want? How do I want them to contribute? And what will I be willing to do in terms of valuation and other terms? And there's nothing like us driving the fundraise. So what are the stages and at what dates do we expect to have what? And then it's preparing that story into various communication tools. More and more people like videos. That first intro email is very important. Ideally, never contact a potential investor without somebody introducing you to them, because again, that 100 to 1, if at least they know where the deal is coming from already, that gives you a much better. And making the list, prioritizing, see who can introduce you, and going for it. Every week, I have some entrepreneurs that I coach, and every week we have a call in this intense period call, and we manage it just like a sales process, because in a way, it's a form of selling. And if any of you were in the corporate world before you're entrepreneurs, it's very much like budget time. and so you go out there and you see what's able to do. And we wish you the best of luck, because it's a fascinating time, but it's also a challenging time.
Yes, it is. And actually, we have so many questions coming up. So thank you for that. Valentina.
Thank you, Brigitte. Thank you, Job. We have so many questions from the audience right now. So I'm going to go over them. We have a very limited time, but Sarah Ramadan is asking, we feel that investments in edutech startups, especially in higher education sector, are not very attractive for investors. What do you think? This is specifically for Brigitte.
Specifically for Brigitte, okay.
We're definitely looking at, and we're definitely looking at that. It's especially because, but that's new. That's just the last couple of months. Again, because for most of us as investors, we realize it's not, we will go back to the pre-COVID. It's a whole new world, and higher education, huge transformation that's going to be needed. So no, we're totally interested.
Great.
And
yes, maybe I can respond to that as well, because I think I honestly feel that while educational institutions, especially in higher education, educational institutions are often experience it to be difficult to transform themselves. So what you see is that a lot of initiatives come from outside, and that these initiatives kind of trigger the incumbent initiatives to really make the change. So honestly, I feel that edtech is an area definitely to go. Yes.
Right. And the best way is if you're an enabling technology, because either you're trying to completely start from scratch whole new models, or you're going to enable these existing institutions to navigate in this transformative space.
Right, right. We have another question from Raymond van Enken. What do you think about agreeing with potential customers to co-invest by paying the services or product upfront, which can be redeemed? Yeah.
Go for it. Go for it. As long as make sure you really can do the product. So this is like the crowdfunding, but where it's a pre-buying. When you're doing, I've had a couple of investments. they thought they were at prototype and they were ready to produce. They were totally at stage 1 of prototype and never got to production, and got a lot of people very, very angry who trusted them. So make sure you really know you'll be able to produce it, and that it would be at a level where you can, that it will not, have lots of hiccups, because those first customers generate your reputation. So yes, but be really, really careful.
Right.
Be careful to be able to produce it, but also be able to scale it, right? So you can easily kind of, once it picks up, you're really able to kind of follow the market, follow the demand, and move with it. Yes, for sure.
Right.
I think a strong model.
Is 100%, 100%.
Yeah.
Yeah. We have another question from Rama Al-Sheikh. Any tips on how to ensure you're getting a fair deal from an investor or VC?
Maybe I can actually, a fair deal from an investor or VC. Like, I think, honestly, your gut feeling really says a lot. I'm a true believer of gut feeling. I'm a true believer of the chemistry that you set up with an investor. You ultimately will have to work a number of years with him or her or with that team. And I think that your gut feeling somehow tells me a lot. In my days, it really did. But like those objective facts of when is it a good deal, when is it not, it's very, very deal specific. So I have a hard time answering that. Maybe, Brigitte, you have some highlights of your experience?
Yeah, benchmark, absolutely benchmark. So first of all, the two big things are term sheets. In most countries where I invest in, there's now some templates that have been done by law firms that look to be fair, a win-win. So see how close what you receive is from that. Secondly, on valuation, in almost every country, it's relatively easy if you are angel networks, if you go to accelerators, it's pretty much documented of stage of development, sector, and country, roughly what you can expect. So I would say talk to others, get a benchmark.
Yeah.
Right.
And you got, really building on what you have said, and cut. Yes.
Right. Another question from Ahmed Jabakji. A startup in the seed stage in the Netherlands, what kind of funding is available at this stage? Is it in return for equity? The company that he's talking about is not registered still, but it will be a tech company.
Okay. I think like in the seed stage of a venture, maybe I should refer to our like third panel or so. The point is, like in the seed stage, there are a number of a large number of options available. Typically, you would look into equity-based funding. So we'll always be involved with like having to part of your company for the investments. But typically, you would go for like business angels, incubators, accelerators that can help you. Of course, crowdfunding might be an option. And then particularly if you have more kind of a B2C offering, so if you have more of a consumer offering, this crowdfunding would be like, I think, a very attractive means to also kind of assess the initial market demand for your product.
Right.
So those would be kind of the key funding sources. And please don't forget, especially here in the Netherlands, the government grants. We have a very active government that really supports entrepreneurship, and both local and governmental, national. So there are many options in that respect. So look into those as well, and at the same time be aware that as Brigitte already mentioned, these government grants don't kind of limit too much the ways you can spend your money again as well. But look into those for sure.
Right. We have less than half a minute, but I wanted to mention one more question. Floris Gertz, as a startup, we currently aim to do as much as we can with our own small investment. We try to build as much value as we can before attracting external financing. How do you determine the optimal moment for attracting financing without losing too much equity? Short and sweet.
Please, Brigitte.
You go to the presentation. We look at the definitions of the presentation. Yeah. That's the best way to do it. It really, really helps.
Perfect. Thank you very, very much, Job. Thank you, Brigitte. It was really, really insightful. It was really engaging.
Thank you. Brigitte, thank you
Bye.
too.
Thank you so much. Up next, don't miss the next session. We have Rames El-Shihedi, Managing Director for the MENA region of Facebook. He's going to be talking about doing cross-border business, so stay tuned.